If you were born before January 2nd, 1961, I need you to stop what you're doing right now and stay with me, because there is a $6,000 deduction sitting inside the federal tax code with your name on it, and the IRS is not going to call you, write you, or explain it. Not to your face, not in the mail, not ever. If you don't know it's there, it simply vanishes. And we're not talking about a small adjustment, not a rounding error, not a few dollars back. I'm talking about a $6,000 deduction per person, $12,000 for a married couple where both spouses qualify, that directly reduces the amount of income the government is allowed to tax you on. The difference between knowing this and not knowing it could be hundreds of dollars back in your pocket when you file your 2025 return. For some of you, it may eliminate your federal income tax bill entirely. And the clock on this is real. This deduction exists only for tax years 2025 through 2028, and then it goes away. 4 years. That's it. After 2028, it expires. So this is not a permanent gift from Washington. It is a limited window, and it is open right now. Here is the part that should concern you deeply. Nobody from the government is going to sit down with you and explain this. Nobody from the IRS is going to call and say, "Hey, we just wanted to make sure you know about that new $6,000 deduction." That is not how any of this works. The system sends you a tax form, you or your preparer fills it out, and whatever deductions you don't claim, you simply don't get. There is no correction. There is no do-over once you file. The government does not audit your return and say, "Oh, you forgot this, here's your money back." What you don't claim, they keep, permanently. For the rest of your life, that money is gone from your pocket and it is not coming back. And because this deduction is brand new, it didn't exist before tax year 2025, millions of seniors and their tax preparers don't know about it yet, or don't fully understand how to claim it, or made the mistake of assuming it was automatically applied. It was not. It requires a specific new form. And if that form is missing from your return, the deduction is missing too. Stay until the end of this video. The last step I'm going to walk you through is the one almost nobody takes, and it is the only step that actually makes the money real. Here is the roadmap. First, we're going to talk about why this deduction exists and exactly how it works. Then I'm going to show you how to check whether you or someone you love already claimed it. And then I'll walk you through step by step how to fix it if you didn't. Let's get into it. On July 4th, 2025, Independence Day, President Trump signed into law a massive piece of legislation called the One Big Beautiful Bill Act, which became Public Law 119-21. Inside that law, buried among hundreds of provisions on taxes, spending, and economic policy, was a provision specifically designed for Americans who are 65 years old or older. It is called the Enhanced Deduction for Seniors, and it works like this. If you were born before January 2nd, 1961, which means you turned 65 during the 2025 tax year or had already passed that birthday, you may claim an additional $6,000 deduction on top of every other deduction you were already entitled to. That $6,000 is per eligible person. If you are married and filing jointly, and your spouse also meets the age requirement and has a valid Social Security number, you may claim $12,000 total between the two of you. And here is what makes this deduction genuinely different from some of the others in the tax code. It does not matter whether you take the standard deduction or whether you itemize. You can claim it either way. That is not always the case with deductions. Many require one or the other. This one stacks on top of whichever path you choose. Now, a deduction is not a tax credit, and it's worth making sure you understand the difference, because it matters for how you think about the money involved. A credit reduces your tax bill dollar for dollar. A deduction reduces the amount of your income that the government is allowed to tax. So if you're in the 12% tax bracket, which is where a lot of retired seniors land, a $6,000 deduction may reduce your federal income tax bill by roughly $720. If you're in the 22% bracket, that same $6,000 deduction could reduce your bill by around $1,320. The exact number depends on your full tax picture, and I want to be precise with you. I am not promising you a specific dollar refund. What I can tell you is what the IRS itself has confirmed, that this deduction exists, that it is $6,000 per eligible person, and that it may substantially reduce, or in some cases eliminate, your federal income tax liability for 2025. There is, however, an income limit. This deduction begins phasing out once your modified adjusted gross income, the IRS calls it MAGI, exceeds $75,000 if you file as a single person, or $150,000 if you file jointly as a married couple. It phases out at a rate of 6 cents for every dollar over that threshold, and it disappears entirely at $175,000 for single filers and $250,000 for joint filers. If your income is below those phase-out thresholds, you may be entitled to the full $6,000. And to be eligible at all, you must have a valid Social Security number, and if you are married and claiming this deduction, you must file a joint return, not separately. One more thing that matters enormously. This deduction is claimed on a brand new IRS form that did not exist before 2025. It is called Schedule 1A. That form is attached to your Form 1040 or your Form 1040-SR, which is the version of the tax return designed specifically for seniors 65 and older, with larger print and a simplified layout. The enhanced deduction for seniors lives in Part 5 of Schedule 1A. If that form is not attached to your return, the deduction was not claimed, period. Now let me make this real for you with a picture of what this looks like in an actual person's life. Imagine a woman named Dorothy, a retired school teacher from Baton Rouge, Louisiana. Dorothy is 71 years old, she's been retired for 8 years, and she collects about $1,600 a month in Social Security benefits. She also receives a modest pension from the state, so her total income for the year comes out to roughly $35,000. She files her taxes every April using the same tax software she has used for years, and the software does a decent job, but she files in February, before all the guidance on the new Schedule 1A is fully incorporated into every version of every tax program. Her software does not prompt her about Part 5. She doesn't know to look for it. She files, gets a small refund, and assumes everything went fine. Dorothy, and people exactly like Dorothy, in cities and towns all over this country, may have just left $6,000 in deductions unclaimed. Not because she was careless, not because she did anything wrong, but because a new form existed that nobody told her about, and the system is not designed to catch what you miss. Dorothy is illustrative. She represents millions of real people in this exact situation, and what happened to her does not have to be permanent for you. This is an invented but realistic scenario to help you understand the stakes. Here is what the real numbers tell us about how widespread this is. As of December 2025, the Social Security Administration estimates that about 87% of all Americans aged 65 and older were receiving Social Security benefits. Put that figure next to the fact that, according to SSA data from August 2025, 57.8 million Social Security beneficiaries are 65 years old or older, and the scale of who this affects becomes clear. The Social Security Administration has also confirmed that the average annual retirement benefit for a retired worker is approximately $24,000, and that up to 85% of that benefit may be taxable under current law, depending on your combined income. That means the overwhelming majority of seniors 65 and older are paying some amount of federal income tax on their Social Security, and many of them now have access to a $6,000 deduction that could directly reduce that tax burden. The enhanced deduction for seniors applies for tax years 2025 through 2028, as confirmed directly by the IRS in its official newsroom guidance on the One Big Beautiful Bill Act, Public Law 119-21. And if it is not claimed, whether you missed it this year or your preparer didn't know about it, that money may still be recoverable, but only if you act. Here is exactly what you need to do, step by step. The first thing you need to do today, not next week, not when tax season rolls around again, today, is go to IRS.gov and pull up the information on the enhanced deduction for seniors. The direct page is at IRS.gov, and you want to search for either Enhanced Deduction for Seniors or Schedule 1A. You will find the official IRS guidance, the full text of the form, and the instructions. What you are looking for is confirmation of whether Schedule 1A, Part 5, appears anywhere on your 2025 tax return. If you e-filed, you can log into your account at IRS.gov and download a copy of your return. Look for Schedule 1A. If it is there and Part 5 is filled in, you may already have claimed the deduction. If it is not there, if Schedule 1A is missing entirely, that is your signal to move to the next step. The second thing you need to do is call your tax preparer, your accountant, or the software company you used and ask them a direct question. Say exactly these words. Was Schedule 1A included in my 2025 federal tax return? And was the enhanced deduction for seniors claimed in Part 5? Those exact words. Do not ask generally if your return looks right. Do not ask if they think you're getting a good refund. Ask specifically about Schedule 1A and Part 5. If your preparer says yes and can point to the form, you are in good shape. If there is any hesitation, any uncertainty, or if the answer is no, that is your cue to ask immediately about filing an amended return. An amended return is submitted using Form 1040-X. You can find it at IRS.gov. Filing an amended return allows you to go back and correct your 2025 return to include the $6,000 deduction you were entitled to. If you need help by phone, the IRS helpline is 1-800-829-1040. When you call, tell the agent, I am 65 or older. I believe I may have failed to claim the enhanced deduction for seniors on Schedule 1A for tax year 2025, and I want to understand the process for filing a Form 1040-X to correct my return. Those exact words will get you to the right place faster than a general question. There is also a free resource worth knowing about. The IRS funds a program called Tax Counseling for the Elderly, known as TCE. It is specifically designed to help taxpayers who are 60 and older with their federal income tax returns. It is staffed by certified volunteers, it is completely free, and it is set up to handle exactly the kind of situation we're talking about today. You can find TCE locations near you at IRS.gov or by calling 1-800-829-1040 and asking for the nearest Tax Counseling for the Elderly site. Now I want to deliver on the promise I made at the start. I told you to stay until the end because the last step is the one almost nobody takes, and it is the only step that actually moves money. Here it is. Filing the amended return. That is the step. Not reading about the deduction. Not calling to ask about it. Not telling your neighbor you heard something interesting. Going to IRS.gov, downloading Form 1040-X, completing it with the corrected figures that include your Schedule 1A and the $6,000 enhanced deduction for seniors, and submitting it. That is the action that produces the refund. Everything else is just information. Information without action is worth $0. The IRS will not reach out to you. The IRS will not flag your return and say, "We think you missed something." You have to be the one who goes back, corrects the record, and claims what you were always legally entitled to. The window to do this is open. The law is real. Public Law 119-21 exists. The form exists. The $6,000 deduction exists. Whether it shows up in your account depends entirely on whether you take this last step. Let me bring this home. If you were born before January 2nd, 1961, and you filed a 2025 federal tax return, you may be entitled to a $6,000 enhanced deduction for seniors under Public Law 119-21, the One Big Beautiful Bill Act, claimed on Schedule 1A attached to your Form 1040 or 1040-SR. That deduction may reduce your federal income tax bill permanently for tax years 2025, 2026, 2027, and 2028. After that, it expires. If you are married and both spouses qualify, the combined deduction may be $12,000. No one called you to tell you this. No one from the government explained it. The burden is on you to know, to check, and to act. And now you know. Send this video to one person you love who was born before January 2nd, 1961 and is collecting Social Security right now. One share takes 10 seconds. If they missed this deduction on their 2025 return, finding this video could put real money back in their hands, money that would otherwise be gone permanently for the rest of their life. You do not need a reason to do something kind for someone you love, but if you needed one, this is it. That is what this channel is here to do. I'll see you in the next one.